Hey everybody, what's going on? Today we're going to look at some more earnings we've got coming this week. We've got some important economic data still to come this week as well. We're going to take a look at what Jay Powell had to say today, and see if that can inform what might happen going forward. We'll look at lots of charts, we'll look at some previous setups, and there are no new setups. This market is just way too choppy to even consider swing trading anything. So, maybe that changes by the weekend, and actually I think it will change by the weekend, and we may have some setups then, and I'll tell you why. All right, let's dig into this. You know the drill. We put a lot of work in these, so if you don't mind, go smash that like button. It really helps us out. And I am Kevin D, and I'm here to help you make sense of all this mess. And we do these videos every week to help our members, like I said, make sense of all this mess, stay up to date on what's going on in the markets, and to highlight fresh opportunities when there are opportunities worth taking advantage of. We have a really cool community of like-minded traders and investors, and members get to take part in live streams and live mentoring sessions. So check out the link down below in the description and come join us on Discord. We'd love to have you there. Everything we do here is for educational purposes only. We're not investment advisors, not private investment advice. All trading and investment decisions are your own and done at your own risk. All right, so here's what we got for earnings tomorrow morning. We've got a few that are probably kind of interesting. Datadog. Definitely interesting. Royal Caribbean could be interesting. Moderna, definitely interesting. That company's going through a lot of changes now that COVID is pretty much done. Peloton, are they going to survive? Are they, are they, the changes they're making to the company, is it working? We might get to find out a little bit about that tomorrow morning. Thursday after the close, probably the absolute most important company of all through this entire earnings season, Apple. Apple, with what's going on right now in the market, Apple is either going to save this market or crash this market, in my opinion. Maybe crash is a little bit of a strong word, but we could definitely, if Apple doesn't perform more, if the market is not happy what they see and hear from Apple, we're definitely going down, and we're probably going down for a number of days. We need Apple to come in and swoop in and save us. So as you can see, we've got a lot of important names tomorrow as well after the close. In addition to Apple, so we've got Shopify, Square, Block, if you want to call it that, Coinbase, DraftKings, Lyft, Carvana. Lots going on. Big day tomorrow for earnings. Friday before the open, we have AMC. And that's all that's probably the most interesting one anyway. Let's move on from there and take a look at what we've got left for economic data this week. So tomorrow we have unemployment claims. That's important. And you've seen we've had some jobs numbers sort of trickling out through the week. The market has reacted somewhat to those. They're all kind of advanced numbers on what's really important, and that comes on Friday. And that is the non-farm payrolls. This is something that the Fed watches closely. They reiterated that again today, that they are watching the job market. We also get, and I haven't seen this one, come up in the list before, but FOMC Financial Stability Report. This is their report on the health of the banking system. So that should be quite interesting, obviously. Right, we're going to move on. We're going to take a look at the markets. We're going to look at the major indices. I guess we'll blast through international markets. We'll look at some important commodities. There is a little bit of stuff going on there. The sectors are like almost everything just chopping sideways. So we'll just look at a couple of the sectors. We won't go through all of them. We'll look at some of the FAANG stocks and a couple of setups that we are either in or almost played. All right, here's our short-term market regime tracker, and you can see we are right in the middle at 0 right now. We are neither bullish nor bearish. We are just chopping and compressing. So, yeah, and you'll see that when we look at the charts right now. So here is the S&P 500, and you can see that we have been in this range for over a month now, about 5 weeks, trapped in this range, peaked outside of the range for one day and went right back into it, tried to go up above the range. Nope, not going to have any of that. Come back down into the range. Now, we do have a bit of a trend line here. It's not the strongest trend line in the world, but and we are above that, or come right into it today and stop there. We are also coming right into an important support resistance zone here. Now this 406 to 408 area has held really well, as you can see, has acted as resistance really well a few times, held as support a number of times. I am expecting that to hold as support again, at least for tomorrow. Like I said earlier, I really think what happens next in the market is all up to Apple. And then on Friday, that non-farm payrolls report. So we'll have to see what's going on with that. So that's the SPY, just sideways, messy, choppy. It's almost impossible to trade this. The Qs. Exactly the same thing here. These are messy, choppy, just slightly above that very similar trend line. Couldn't get above this major, I'm calling it a major resistance level now. You can see it was a gap, and that gap was filled. And that gap comes way back from August of last year. I'm going to get rid of that gap now. But it does leave behind this major resistance level now. And we pull back from there, and we are either going to find some support on this trend line or probably move down a little farther and then find support down here. This is an important level here at around 313. IWM. Now, this SPY, the Dow, SPY, the NASDAQ, were all red today. Anywhere from about 0.5% up to the Dow close to a full percent. IWM, on the other hand, was green. Which is really interesting considering that there's still issues in the banking sector. But this was green on the backs of biotech, which we will look at later. Biotech had a huge day. So we'll take a look at that ETF. And you can see that, but other than that, IWM, the Russell 2000, is still chopping around in this range. And still affected a fair bit by those regional banks. All right, let's take a look at our volatility index. This is up a little bit today. Still well under 20, which is a little surprising. I guess because, we are, the market is basically going sideways. It just seems quite volatile at doing it. Let's look at our 10-year yield. And you can see that this is at a major support level again. It's come down here, a couple of times below this, but it's gotten it back every time. So this is a really important level. And if it keeps kind of trying to break through there, it will just fall apart one day. But maybe not yet. And let's take a look at our dollar index. This is another one that's just going sideways. Can't seem to make up its mind where it wants to go. There's really no information to be had here at the moment, other than, as you've seen many times, the longer term pattern on this is a giant head and shoulders top. But we've just got sideways right now. Okay, let's move on to ACWX, All World Index. Hey, guess what? It's going sideways. EFA, Europe, Developed Far East, it's just going sideways. Tried to poke above that range, tried to poke below that range. No, it's going to stay inside the range. Emerging markets, ex-China. This is just going sideways, but getting kind of interesting in here. We've got a little bit of a trend line going on within this much larger pennant formation. This looks like it wants to break out the top of this range, but it's going to need some help from either the US dollar breaking down out of its range, or equity markets catching a bid. I don't see this just breaking out and going all on its own. It needs some sort of catalyst. But it's interesting what's going on here. Don't take your eyes off this one. FXI China, this looks ready to break down. Still above support though, so I may be putting a nail in that coffin a little too soon here, but does not look hopeful for China. Gold. So gold's had a bit of a move up. As you can see over the last couple of days, it broke out of that range it was in. And a couple of strong days. Now watch out for this pivot level here, and there's another pivot level overhead. So there's lots of overhead here on gold, but this looks like it wants to go higher. GDX, the miners, confirming the move to a degree, but with equities being weak, these are gonna underperform gold probably. Silver. Moving along, moving up with gold, not quite as strong, but moving up nonetheless. Some good buying wicks under there. And copper. Copper's kind of coming apart here, about to break down from this pivot level. And but we've got the 200-day moving average below that, and we have another support level down here. But this sort of doesn't bode well. It doesn't really bode well for the economy, because if copper is falling apart, it says that the market is expecting a recession. Okay, moving on to oil. This has totally broken down over the last 2 days. You can see we had a target down here of 70 and a quarter. From this little bear flag that had formed here, and you can see that they're well below that target now. It looks like we're going to come and test this 66.50 support level. That's a fairly important support level, and then we've got this 64.12 pivot below that, and then some minor support at 62. And if it breaks below that support at 62, it's where are we? 62 there. Yeah. Then it's in, the next move down is to 58 after that. So there are support levels below here, but this thing is kind of crashing down right now, and could crash through these levels fairly easily, I think. All right, natural gas. This is mostly choppy, but having a few down days here, as you can see. So we have broken through. We've got a number of levels in here, and it's now broken down and into the lower one of those. So it looks like we're coming down and testing the lows on this natural gas. XLE Energy is confirming the breakdown in the energy sector with this giant red candle yesterday, and another red candle today. Tried to reach up and move higher today, but was totally rejected and closed right on the lows. Should expect more downside in this ETF and any of the components of this ETF. 10 we had looked at last week. It looked, it printed that really nice looking bullish hammer candle. We were concerned about the low volume on that hammer candle, and rightly so. You can see that this was not able to follow through on that hammer, and has now come, look how far that's come back down and testing these lows right through that pivot here. Testing a level we haven't seen since October. Still got some more support levels below here before it completely falls apart, but it's not looking good for the solars. We're going to skip over a few of these sectors now, but we will take a look at financials for obvious reasons. You can see that these have had a bad couple of days. Had some nice days. Monday was indecisive, as it was everywhere, not only in financials, but most of the sectors were indecisive on Monday. But the last 2 days now completely fallen apart, closing very nearly lows today. This does not bode well. KRE, the regional banks. This is the cause of a lot of the trouble this week. It's looking. The market is basically telling us more of these banks are going to drop, and by drop I mean go under, be taken over FDIC, and hopefully have their assets bought out by somebody. But all these big banks are going to start running out of cash to be buying these assets. So Yeah, this is not good. It looks like we've got probably another down day in here. Come test this 3690 level that goes way back to, let's go back to, 2020, October of 2020. Might have to start drawing in some new levels on that, but we'll see how this goes over the next couple of days here, and we'll definitely be taking a look at this one again on the weekend. Healthcare is kind of flat today, but one of these subsectors within healthcare had an outstanding day. That would be biotech, up almost 4.5% today. You can see basically from one end of the range to the other. I think we may need to widen out this range a little bit. Maybe take that line kind of up here or something like that. I don't know. I think we'll just leave that like that for now. I think that looks better. It was, with the plunge towards the end of the day in the overall markets, this was just unable to hold its highs. But, this was strong today. Good stuff going on there in biotech. Skip over a few more of these. Let's go to technology. A little bit of a rounding top here in technology after that indecisive candle on Monday. But you can see we've come down to the 10-day and 21-day moving average. We've got a support level right there as well. And just below that, we have this uptrend line. So the expectation there is this finds support. But just looking at everything else, I feel like we should be expecting things to break down further. We'll see. And again, like I've been saying, it's all up to Apple now. So Apple can turn this around, or this can come, crashing down through some of these support levels. Communications, much the same thing going on here. You can see we've got some good support just below, but it needs some help. It needs a reason to go up. SMH. It's looking messy if I remember correctly. Yeah, this is choppy, going sideways mostly. All right, Meta. Moving on to our FAANGs here. Meta had some bad news today. Dropped, sharp drop intraday. Let's take a quick look at that. Right here, something to do with, I forget the headline. I only knew they had something about how they're not protecting children properly, I think, if I remember correctly. And you can see there was a nasty drop on that. Did get a lot of it back, though, before rolling over again with the market. All right, move back to our daily chart here, and we will move on to Apple. Okay, what do we got going on in Apple? Well, you can see we are in a nice uptrend. That uptrend is slowing slightly, so we should probably adjust this. Let's bring this into, I don't like that wick below there because it doesn't fit everything else very well. But yeah, we'll just allow that little wick. You can see now we are right on this trend line. This is important. We do have this pivot support, or this old pivot here. You can see that kind of mostly acted as support and resistance before. I think I'll actually change that line now. Oops. There we go. Yeah, so a minor support level just below. We've also got the we've got a 10-day moving average there. We've got the 21-day moving average. The 21-day has worked well for a couple of months now. So there's no reason to believe that Apple would break down through this. However, they have earnings tomorrow, as you know, and earnings trumps fundamentals. A big change in fundamentals trump technicals. So, if there's a fundamental reason to revalue Apple's valuation lower, it will just come crashing down through these levels until it finds the correct value. Now that may be, we do sometimes find support at technical levels, and this 160 area is a spot that I would, if it's crashing down, I would look for support. So let's get that in there. But you just have to remember that these support resistance levels are easily broken on a big fundamental event like earnings. Okay, let's take a look at Amazon. Broke down out of its wedge a little bit. Okay, let's just adjust this. Move that up to, again, I like that one kind of there. Okay. Maybe not, actually. There we go. Yeah, I mean, nice bounce yesterday. Because we saw a lot of, we've seen a lot of red yesterday and today, and Amazon's been bucking that trend. It had its red, a couple days early. So this is interesting. This will be worth watching tomorrow for sure. Netflix. I don't think there was much going on here. I think this is sideways. Yeah, starting to drift a little lower here. Trying to break this trend line. Let's just tweak that down a little bit to there. Yeah, still trying to break that, but look at, there's a pivot low here. It kind of works with a bunch of stuff that's going on here, doesn't it? Yeah, let's get a level on that. I think it comes, no, there it is right there. Okay, yeah, it could turn into an important level right there. Google. This thing is just totally going sideways. This is nowhere to land on this one. Nothing to be done here on Google. Microsoft, I think this rolled over a little bit from its recent, bull flag. Don't like that there's 3 red candles inside that bull flag, but it is a bull flag nonetheless. And on a happier market, I would strongly recommend you play a breakout from this. And if the market gets happy, for instance, on Apple earnings, this could be a really nice play. Playing the breakout of this bull flag. However, this could just as easily break to the downside. So I think it's worth watching, but I think you've got to be really careful on it and pay attention to what the market is doing. Tesla, just a mess. Nothing going on here. They had a bit of a pop yesterday when they announced they were raising prices again. 6 price drops so far this year and 1 raise. Market doesn't seem to care at all. Just chopping sideways. But this overall, this does not look good. This is in a serious downtrend here, and I think that there's easily more downside in this. HIMS. This is one of the bright spots in everything we look at. HIMS just hangs in here. Look at, we've got this nice consolidation going right up at this pivot level, this important resistance level. I just like the way this looks. Hanging on really nicely to that 10-day moving average. You've got the 21 just below, the 50 below that. Now, it moved fairly quick through here. So if this did start to break down, it could come down quite quickly into 10. So that's something to be aware of. And I don't like how we've got sort of selling wicks on top of these candles. It's not surprising though, considering where we are, right? We're consolidating and we expect this to break to the upside. I think we just have to be patient and wait for it. But upside is where I think we go on this. Now, some of the plays that we talked about on the weekend. One that I really liked, and I'm really surprised by the price action after this, but it's all related to crypto, right? And we talked about that on the weekend. I liked Mara, and because crypto over the weekend was looking all right. This was a nice tight consolidation. It may not look that tight, but remember, this stock has an ATR of almost 12%. We expect a range every day of 12% in this thing. So this was a tight consolidation. Unfortunately, it broke out to the downside of that. But it's come into this, support resistance level there. So one touch, and then another touch, a double bottom in there, and a tweezer pattern. I almost bought this today just off this tweezer pattern, but didn't want to, for obvious reasons with the FOMC today. I wanted to see how that played out. And you can see here that we had a bit of a pullback there with the rest of the market. We've now got this nice little downtrend line, this descending triangle. I still think there's a play here on a breakout to the upside of this, but again, you've got to be aware of market sentiment and what is crypto doing, and what are the rest of these crypto stocks doing. So there's a lot of moving pieces in this trade. It's very risky, but there could be a play in this still. And the other ones that we were looking at on the weekend were solars. We looked at Enphase and First Solar. I mentioned that I liked First Solar better. And it held up a little bit better than Enphase. You can see it tried to break out and just pulled back. I actually bought this breakout and got out of it really quickly. This gave me a nice little profit, or a small profit, but it gave profit really quick. And then it started to pull back fairly quick, and I'm just, no, this is not working, and I got out, and I'm so glad that I did, because look where this has come almost all the way back. Now, I would be watching this level right here as a pivot. I think that's going to hold. And I would look for a little setup down here. If you're at all interested in this. This is a bit of a sketchy play, though, because I mean the stock is looking weak, the sector's looking weak, and its peers, its peers are looking weak because that sector is looking weak. So it may need some time, but I think this level, this 170-ish level, is going to hold on this, and it might give us a setup for a bounce out of that at some point if we're patient. And that is it. I have no more stocks to look at today. We just got to we've got to wait this out, see how things settle out after the FOMC, which I think I forgot to talk about, didn't I? The market didn't get what it wanted out of the FOMC. The market wanted Powell to come out and say, "Hey, we're gonna stop raising rates now," and I think that was an unreasonable expectation. The market got. I mean, I think we got what we should have been expecting. We got a bit of a hawkish Powell, a guy who refused to say he's going to cut rates this year, a guy who said that inflation is his priority, and implied that it doesn't matter what happens to banks, it doesn't matter what happens to jobs, and it doesn't matter what happens to the economy as long as inflation goes down. And given all of that, I guess we shouldn't be surprised to see the market coming down right now. But I think the market is kind of overreacting. I think there are forces within the market who are maybe a little too optimistic out of this meeting. And that's why we're going down. But I think most of us are realists, and we understand this. We understand that he kind of actually still needs to talk hawkish, and he's probably in reality nowhere near as hawkish as he sounds. And I do believe that there will not be a hike at the next meeting. But like they said, they are going to be data dependent. But right now, the market is, I think, pricing out farther into the future than the next meeting. And if you look at the sentiment, the CME FedWatch tool, I'll just bring that in here right now. And looking ahead, you can see, so for the June meeting, stay right where we are, 97% probability, no rate hike, no cut. But what surprises me a little bit is that we seem to still be leaning towards a cut. At the July meeting, those probabilities get higher. In fact, it becomes pretty much a sure thing by the September meeting. And I think this is just a little too optimistic, I think. And I think we're going to have to reprice this a little bit. So that's where we're at with that. So we're starting to reprice this a bit, but like I've been saying all along, Apple could come along and save the day here. So let's hope that they do. All right, let's take a look at what we've got coming up. And that would be another ticker talk next Wednesday. And of course, our market weekend briefings. And hopefully hopefully this market gets a little more decisive, because right now it's very indecisive. It really could go either way. I think by the weekend we will have more clarity over where we go from here. So I'll definitely be updating you on that. Thanks for watching. Hit that like button, share, and subscribe. And I hope you enjoy the rest of your week.